I'm Anders Petterson, and I'm the founder and managing director of ArtTactic. And with me, I have Lindsay Dewar, who is head of analytics. And today, I wanted to talk a little bit about ArtTactic. Many of you already know us a little bit, but hopefully through this presentation today, we'll give a little bit more insight into some of the initiatives that we've been working on over the years, some of the new initiatives, and some of the reports that we are publishing on a sort of weekly basis. So we're going to put this presentation into sort of two parts. The first part is really answering some of the questions that many of you actually submitted earlier through the survey. And I will try to kind of highlight, I guess, some of the research that we've been doing through those questions that you've been asking. And then hopefully we'll also have a 10-15 minutes Q&A at the end. The second part, Lindsay will talk us through a little bit the offering, what kind of reports we offer, and other services that is also included in the ArtTactic spectrum of products and services. So with no further ado, I wanted to kind of just start very quickly to, let me see, just going to move on to the next page, a little bit about ourselves. So I started, for those of you, again, who don't know me, I started ArtTactic in 2001. So we've been running this company now for 21 years. It's been a long journey, an interesting journey. I think we have seen probably the most interesting part of the evolution of the art market. I think the last 20 years has been remarkable in many regards, and some of these things we will talk about today. So it's really been fascinating to be part of this journey for such a long time. And it continues really to change. I think over the last 2 or 3 years, we have, particularly on the back of the pandemic, seen an enormous appetite for innovation, change, next generation, so many new issues that are affecting the art market, probably for the better, but often also, creating challenges for the incumbent and existing operators in the marketplace. We are basically, I think, some of you have read the research. It's very much research that's based on different types of data. We were doing a lot of crowdsourcing, a lot of survey-based data. We are proud of ourselves to have kind of built up a global network of experts. Experts is not necessarily experts in the sort of traditional art sense, but it could be experts also from professional industries around the art market, whether it's insurance or lawyers or logistics, and many other professions such as banking, wealth management, and so forth. Over tools, as I said, we'll talk a little bit more about later on in terms of the clients. It's really broad and has become, I would say, over the last 10, 15 years, even broader in terms of what kind of people are using our research. I would say mostly this is a professional tool. It's not so much, bedtime reading. It's really quite data oriented. It's something that's hopefully helpful to give people an insight into the kind of trends that is shaping and forming the nature of the art market at any given point in time. We work with private banks, family offices, insurance companies, collectors, art appraisers, art funds, fractional ownership companies, dealers, galleries, and so forth. And you will see some of the initiatives that we have really been focusing on over the last 2 decades. It's really the intersection between art and technology. And the other section is between art and finance, or art and wealth management, which is 2 of the kind of core research strands that we've been working in partnership with both Deloitte and Hiscox for over a decade now. So let me just take the first question that came from one of our participants that submitted this earlier this week. And the observation that the person I've noticed was basically saying the art market sales have not seen any significant growth in the last 10 years. Why? And is this likely to change? Now, that sounds on the surface a bit counterintuitive, because I think, we sort of have this perception that the market has done incredibly well over the last 10 years. We have seen record prices. We have seen, $100 million transactions. We've seen massive single owner collections coming to the market and so forth. So how come, where's this coming from? And it's interesting because if we do look at the data, and the data that we have on the overall market is in this case, taken from the Art Basel UBS Art Market Report, which is produced by Claire McAndrew, and a report that has been tracking the market for the last 20 years, both the primary market and the auction market. And as you can see on the graph on the right, the orange line, which is an indexation of the total sales on an annual basis between 2008 and 2021, it's only up 5% in this period. So obviously, if you took that in real terms and adjusted for inflation, there will be a negative growth in this period. And if we combine this with the other graph, which is the Capgemini's high net worth wealth in terms of dollar amounts, also index in an index form, you can see that the gap between the wealth and the growth in the art market has been widening over the last 12 years. And I think this is an interesting question. Why is this happening? How come that the art market hasn't followed, even if we might see individual prices going up? Why hasn't the art market grown at the same pace as we have seen in terms of wealth creation? And it's interesting if you look at that compared, for example, with personal luxury goods market, has seen a significant, much higher growth than the art market. And that might be some of the reasons why we are also starting to see the likes of Sotheby's and Christie's and many of the auction houses moving more into the luxury goods segment when it comes to their own sales. I'm going to take a closer look at some of these things later on. So this, the question, I guess, it begs, why doesn't it grow? And that was the second question that was posed. Why is this happening? And I think the market has, and I think those of you who have maybe heard me before, I think I've been quite critical to the way that the existing art market has been, approaching the whole thing about development and, cultivating and incubating new audiences into the market. I think there hasn't been a huge effort in trying to either work with next generation collectors in trying to bring them into the market. It's been seen as a relatively unfriendly marketplace, intimidating for many. The old business model, which is largely has been physical and used as either, galleries, art fairs, auctions, and so forth, are often platforms and mediums that are not that attractive to a certain type of generation. And I think this is something that has prevented, I think, the art world to really embrace and to cultivate and to increase their audience. I think this is changing, and part of this change, I think, has been triggered by COVID. I think the pandemic, in a sense, forced the art world to start to think about digital and innovation in a very different way. There was no option when the market closed down in March 2020. Most physical events around the world were cancelled, and the art world had to move onto digital formats, whether that was online viewing rooms or online auctions. And we can see actually here on this graph the kind of impact it had. I mean, the market in terms of online sale had a growth period between 2013 and 2016, according to the research that we've done with Hiscox over the years. It had a period of stagnation, which virtually we saw very little, kind of anemic growth, about 4% between 2018 and 2019. And then suddenly, obviously, the pandemic hit us and we're starting to see a shift to the online. I don't think the growth pattern we see here is not going to continue, but I think now online sales is become the kind of new normal. It's nothing new in a sense. It's become pretty much now integrated as part of the overall sales, the sales format of most auction houses. Now, what this has done is, I think it's created an entirely new types of ecosystem around the art market. And I think this is where, hopefully, where we're going to start to see the opportunities for future growth in the future, where basically we are looking at different types of providers providing different types of platforms. We're talking about anything from NFTs, the way of using social media, data and AI, blockchain and fractional ownership. All of those different initiatives that are now kind of built around the art market, I think, is likely to really increase the participation, bringing in audiences from different types of segments in the market by sharpening the tools, making the tools more attractive, making the market more transparent, making it more trustworthy. All those things that I think is often the problems with the art market is many, but many of them is actually linked to trust and the lack of knowledge among audiences in how we should engage in this market. So I think this is, in a sense, is the exciting thing right now is that there's so much happening with regards to new companies entering into the marketplace. Not everyone's going to survive. I think there will obviously be a huge competition in trying to kind of be the one that ultimately will dominate these different spaces. But I think the kind of growth that we've seen and the type of money that's coming in on the funding side is, signals that I think we are in a sort of a shift in the market that hopefully will start to close this gap that we mentioned earlier between the growth in the market and the growth in overall wealth. The question two was, what are we seeing in terms of new art ownership models? And I think this is alluded to a little bit in the previous slide. But if we take some of the research that we've done with Deloitte from the Art and Finance report, and this is from the report last year that was launched in October, we looked at what kind of product, investment products that collectors will be potentially interested in. And one of the most, I guess, the common thing, and this is across different generations, whether you are over 35 or under 35, is direct investment. So basically an outright ownership of artwork, which is the most normal traditional form of buying and owning art. I think what's interesting is to look at these other types of ownership models that we have been introduced to, particularly in the last 18 months, whether it's the NFTs as a form of ownership of digital collectibles, or whether we're talking about fractional investment in art, which is basically whether it's shares or security tokens linked to artworks, and then obviously more kind of sort of traditional art investment fund models. But what I think is interesting is that what we have seen, particularly again, really, I would say the pandemic has been a catalyst for this kind of trend as well, is that people are looking at new ways of engaging with art, new ways of owning art, new ways of participating in different aspects of it. One of the part I mentioned also social impact investment products in culture. I think not everything is about investment and return, but it's also how we can think about new patronage, new type of philanthropy models that can also be, supportive of the art world itself. And I think that's many of these initiatives are backed by technology, they are backed by blockchain, they're backed by other types of technologies that are, I think will really again escalate the introduction of these new models, which I think will have a real impact on audiences going forward. I think it's interesting if you look at the appetite here between over 35s and under 35s, you could see that things like NFTs or fractional investment in art is a younger sort of millennial type of product. A lot of people, I think there's much more openness among young generation to think about art ownership and art investment and art patronage in a different way that maybe the previous generation. I think obviously this is the generation that in 15, 20 years time will, I think, shape pretty much the art world. And I think this is what the art world really needs to now think about, is how do we cultivate, how do we accommodate for this generation going forward? Because if the art world doesn't do their job well enough, that generation will just move somewhere else and another market will take its place. And I think, NFTs in a certain extent was a little bit of an example how much you could potentially grow a market. I'm not saying that NFT market was a particularly healthy market as we know, but it's exemplify really how quickly something can grow if you find the right model and how you can, to attract audiences. So I think there are elements of this that will continue. NFTs, as we mentioned, has had and we've done research in this field, and particularly we continue to do research in NFTs, but NFT linked to the art world and to the art market. What impact will it have? We know that the market really peaked in August last year, and then since then has really had a tough time. It's what we call the crypto winter. Both cryptocurrencies have suffered. Obviously, what we see just generally the economic situation has also had an impact directly on cryptocurrencies as well as NFTs. And I think the sort of speculative nature of the NFT market is rather fizzled out. And we will potentially, I think we're going to start to see a sort of new stage of the NFT market when it comes to the involvement of the art world in this. And already we're starting to see, artists and galleries and others experimenting with different ways of using NFTs as new types of engagement models, new types of ownership models, etc. And so I don't think NFT is going to disappear, but probably has disappeared at least for a while in terms of its sort of speculative asset that we have seen, during the last 2 years. On the fractional ownership side, I think, again, there's something, a kind of a momentum has been built up, particularly one of the companies in the US, Masterworks, is now the leading sort of fractional ownership platform in first, I think by first half of 2022, there was about $500 million worth of work that had been acquired. More than 130 works, and is now one of the biggest operators out there. And I think it was interesting here again is the appetite that Masterworks has created for art as an investment. Whether this is sort of sustainable and whether the model of art fractional ownership is something that will survive or not, I think that's still to be seen. The model is still to be tested. It's new. There are past and historic examples of fractional ownership models not doing that particularly well. So I think, the jury is still out. But what I think is interesting, it's, again, the type of audiences that are interested in these type of new products. And these are, I would say, largely audience that has probably not been that involved in the art world, but that are looking at the art world through the lens, in this case, of a fractional ownership investment in an artwork. So I think the more the art world is really opening up different doors, different channels into the art world, creating different platforms for different audience to engage, I think that's really the exciting part. And we can have different opinions of whether we think, the investment route is the appropriate route to engage in the artwork. I think for some people that is their starting point, and hopefully, by actually engaging with art as an investment, they might, move on to actually become collectors of art. And not everyone's going to go through the traditional route of, appreciation for art in its sort of more cultural setting. Sometimes people will come through the investment route. And I think the fractional ownership is one of those doors that can open up for a new type of audience. So that was a little bit about kind of art as an asset. I want to just move to question 3, which is about market hubs and, who will be the sort of future winners and losers. So this is more a question that was linked to geography, really where is the market where's the market heading? Where's the US versus Europe, UK, London? What is London's role in the future? What is Asia's role in the future? And so forth. A lot of, again, the research that we produce on a quarterly, often monthly level is really monitoring these kind of geographical differences and the geographical shifts that we have seen in the market. This is taken from our Raw Facts report, which is a quarterly and semi-annual, 6 monthly report looking at all auctions across Sotheby's, Christie's and Phillips. In this case, we're just looking at the Impressionist, Modern, Post-war and Contemporary, and you could see that largely, New York dominates this space and has been doing so. What is interesting, particularly in 2021, which was last year and was a record year for the market, you could see that Hong Kong was overtaking London. So Hong Kong had a 18% market share versus London's 15.5%. And that was the first time in our data set that we start to see Hong Kong overtaking London. I think, at that point, there was a question whether London's position as an art center was under threat, particularly by different new locations and new hubs in Asia. I think what's interesting is that actually the latter part of last year, Hong Kong's market, and the early part of this year, the Hong Kong market has slowed down significantly, which has impacted this year. So if you look at the first half of 2022, London is clearly back again with a 27% market share, and the Hong Kong market has fallen back to 10%. So these shifts are, I think, there's still a bit of a struggle between where is the market going. And I think we know with Hong Kong, it's been tricky with a pandemic. It's been tricky with the restrictions imposed in terms of actually doing business and traveling and so forth, which has made it difficult logistically to operate this market center as normal. I think the fact that we're starting to see also other hubs in Asia, whether it's Singapore or Seoul in Korea, where the Free Art Fair just recently was organized. I think there's also sort of I think Hong Kong's role is also under threat, and actually we might start to see new centers in Asia popping up as the kind of the new hubs in this market. So I think this is an interesting part, and I think if we move to other categories, so if we sort of go outside the typical fine art categories, I think this is interesting to see that the market is much more open. New York is obviously still have a significant presence, but it's interesting to look at how Hong Kong really the first half of this year accounted for 31% of all other categories. So these are jewelry, watches, other types of luxury, decorative arts, etc. And it's really now the largest market is now out of Hong Kong. And I think this signals also a little bit where the market is going forward. And if we look at these Sotheby's and Christie's and Phillips and the major sort of top auction houses, their expansion into other luxury goods is clearly that's where they see the growth. And the luxury goods market is significantly larger than the fine art market, and I think the growth that we will see, particularly among the auction houses, is really going to start to be happening in the luxury goods segment. And I think that's we can see the picture here. As I said, it looks quite different from the fine art segment, which is very traditionally sort of a New York, London, Hong Kong. In this case, you can see that Hong Kong is really the leading place for luxury goods, and part of the sort of the drive that we've seen in Asia for luxury good sales in general. Now, I guess a final thing before I let my colleague Lindsay come on is we're obviously in a quite a tricky position right now with current economic turmoil. Not everyone is in the UK at the moment, but for those who are, the pound is obviously being hammered with the recent announcement from the government regarding how they're going to tackle this crisis, which wasn't met particularly favorably by the market. We have high energy costs, we have high inflation, we have a slowing economy. And I guess the question is, what could the sort of current economic turmoil, what impact will it have on the art market in the next sort of short term, medium term, and long term? Now, the data that we have at the moment, and this is really, again, showing you a little bit of an insight into the type of research we do. This comes from over 6 monthly research into, it's called the Art Market Confidence Indicator, which is a survey among experts that are participating in this survey on a 6 monthly basis and giving their opinions about different aspects of the market. In this case, this is an indicator which basically look at an economic aspect, that look at the primary markets or the kind of gallery sector, and looks at the secondary market, really the auction market. And you could see in the last reading, which was conducted in early July, how the market has it was a massive bounce back from May 20, which was the sort of the kind of just after the pandemic broke out. I think the recovery in the market really came quite quickly, and we saw that also feeding into the auction data, which meant that 2021 was one of the top year, the highest record-selling years ever. But what we're starting to see now is that people are getting nervous again. And you can see that the economic indicator is really what drives the overall confidence down. I think people have low expectations, at least in the sort of next 6 months, that we will see any improvement in the economic situation, and probably even for the worse. There is less worry in the primary market, in the gallery sector, but more worry in the secondary market. So this reading, 64, 43, and 17. The line 50, just to kind of just quickly explain, any reading above the 50 line basically means that the majority of experts are positive to the development in the next 6 months. So it's basically a survey that goes from 6 months to 6 months, so looking forward to what is happening. So I think the sentiment at the moment is a sentiment of uncertainty. I think most people are worried from a business point of view, are worried from a kind of consumer point of view about what's going to happen in the coming 6 months. So I think that's going to be maybe some kind of undertone of what might sort of expect to hit us as we kind of go into this autumn. But then I think we need to it's the art world is, and the art market is a a rather strange place when it comes to kind of economics and the impact of external effects such as economic uncertainty. And what we have seen actually, sort of the figures itself, if we look at all categories for Sotheby's, Christie's and Phillips for the first half of this year, it's been a record year. 7.4 billion has been raised in public sales, and that's the highest in the period between 2016 and 2022. So the first half, and that's not as the problems just started, over the summer, the problems has been, virtually from the outbreak of the war in Ukraine till now. And regardless of that, the markets managed to really stage a very strong first half. Now, the question is whether that's going to continue into the second half. Now, some of these things, there's always lagging effects in the auction market. It takes time to organize these sales, and sometimes it doesn't really feed into before maybe 6 to 10 months later. But already we have had the announcement of Paul Allen's estates coming to auction for an estimated 1 billion. That's going to definitely raise hopefully the confidence in the market. So I think we are likely, unless something major is going to happen, I think 2022 will still be a relatively robust year and could actually, if we see the same type of momentum that we see in 2022 feeding into the second half, the market could hold up. I think it's a little bit dangerous, obviously, to look at these auction data and sort of think, well, this is the art market as a whole. This is when we talk about the major auction houses, we're talking about the very sort of upper echelon of the market. This is not reflecting the market as a whole. And I think, galleries and auction houses that maybe operate at slightly different price levels and maybe not at the premium level, I think going to potentially face a tougher time than some of the premium end of the market that often are appealing to a type of wealth demographics that are, although they might be affected by a crisis, not as affected by as most people. So I think we've got to be a little bit careful of kind of just interpreting the current results in the auctions as if this is going to be the overall state of the art market as a whole. I think we're going to, all of us, whatever business you're in, probably going to start to feel the pinch as we heading into the autumn and early next year. Now, what can we learn a little bit from, if you look at art as an asset class and looking at the kind of the nature of the market? I think the art world has had the art market as a whole has had a remarkable ability to ride out crisis. And I think, the 2009, if you could see, which was the financial crisis, the market recovered virtually back to its former 2000 peak level within 12 months. We saw the same in 2020 during the pandemic. It was a drop in sales from 2019, but the following year was a new record year for the market. So I think this is obviously sort of playing into people's, I guess, a feeling of art that, beyond being a cultural and aesthetic and historic and object, is also the financial characteristics of art is also playing a significant role in why people are buying art. And I think this is something I'm going to look at on the next slide, is just what underpins, what is the motivations that buyers have when they buy art these days, which is obviously not only about passion and emotion, it's also increasingly the financial characteristics that's embedded in art. Now, I think it's just worth quickly mentioning that the figures that we are seeing in the art world is also backed up by the auction guarantees. And I think, what we have seen, particularly in 2021 and the first half of 2022, is that auction guarantees play a very significant role in the market. Almost 60% of the sales, evening sales at the top 3 auction houses are guaranteed. Now, and that means obviously there's a kind of a safety net in the market. There's a sort of, the likelihood that an auction will flop or that works will not sell, obviously, is minimized by the fact that they have guarantees. The question is whether guarantees or more guarantees in the market, is that the sign of strength or is it a sign of weakness? On one hand, you could say that there are the importance of preserving the kind of veneer that everything is fine. The guarantees, in a sense, serves that purpose. They ensures that the sales are going well and that the kind of the lots and the transaction are kind of underwritten prior to the sale. But it could also be a weakness, and I think in a sense, if it's perceived as that auction guarantees are sort of a way trying to prop up the market, then that I think might be a sign of more uncertainty to come. So I think, again, this is a market. Actually, last week or 2 weeks ago, we launched an auction guarantee report that looked at specifically the market through the eyes of auction guarantees, and to kind of figure out what is being guaranteed, because we have to think about auction guarantees as there's obviously another side of this, is that there are people that's willing to put up these guarantees, and and there's a financial risk associated with it. So obviously that risk, there's an appetite for that, and then we have looked at the returns over the years on auction guarantees as being a really good business for many. I think these returns, particularly in 2022 has come down, which makes it also the margins maybe much smaller than have been in the past, and that might detract guarantors in the future to actually move into the market, which then could obviously affect the outcome of auctions as we head into the autumn. So we will see. There's still a fair amount of uncertainty out there. Now, just finally, I think it's also important that when we think about why people buy art, and I think we talked about some of the more kind of asset-based or asset qualities. People are looking at art definitely as a collectible, emotional item, but I think also financial characteristics such as portfolio diversification, looking at the investment returns, thinking about the art market as a safe haven, particularly in times of uncertainty. A lot of people, almost a third, thinking about also art as an inflation hedge. So it could also, to a certain extent, the economic uncertainty that we're currently facing could also mean that at least those people who can afford it might actually look at art as an attractive investment proposition in times of uncertainty. So I think we will see the next 6 months. I have a feeling that we are likely to, in broad terms, going to see probably pretty much the same picture as we saw in the first half of 2022. The market do have a bit of a lagging effect, and might take us some time to kind of incorporate some of the uncertainty that we're seeing. But I think early next year is really probably where we're going to start to see the impact of the economic situation that we're finding ourselves in. So with that, I'll leave it to my colleagues to talk a little bit about our products. I just want to sort of say that if you have any questions, please, and I think I didn't mention that up front, please put that into your chat or into our chat box, or which is probably the best place to do it. And Lindsay will read them out, and I will see if I can, do my best to answer any questions you might have regarding what we just talked about, or any other thing that might be on your that you want to ask. So Lindsay, I'll leave it to you.
Great, thank you, Anders. Anders has got the slideshow, so I might have to ask him for the next slide occasionally. So I just wanted to go over kind of who we are at ArtTactic and what products we offer as a company. So you can buy reports, or we have a membership, which I'll explain later. So our reports are all available through our membership, and we have several different types, which I will walk you through now. So the first ones up are our artist reports. Anders, could I have the next one, please? Thank you. So we have various different types of artist reports, and these kind of range by individual artists, which can be timed to coincide with a large event in the art world. As you can see, we've just done a Kentridge report, which we released today, actually, and that's to coincide with the Royal Academy show, which opened at the weekend in London. It's a big show that we have here. And we also do themed reports, and also we have a special focus on next gen artists, who we define as young artists aged under 45. So Anders, if I could have the next slide, I can show you a bit more about our next gen reports. So this was a project that we really started working on a few years ago. We were commissioned by JLT to write a global survey. We were aware that there were lots of young artists, and we like to look at them from a whole range of perspectives. So what art fairs are they involved in? Who represents them in terms of galleries? Are they in museums, exhibitions, collections? what top collectors are interested in these young artists. And this kind of spurred us on to start our next gen artist report theme. So each month we have a different report in which we have an expert panel, and we ask them what they think of artists, including, you can see here, Adam Pendleton, Emily May Smith, and all sorts of different artists. The common theme is that they're under 45 and have some auction market and some exhibition history, so that we can kind of compare the two strands of their markets. And we also, for the first time, did a top 100. I think Anders is a bit ahead of me, where we looked at the top 100 young artists. So the next is our research reports, and these focus on our auction reports. So we look at the auction market as a whole, which is our raw facts, which is a lot of the figures that Anders was showing you earlier. And then we drill down into auction seasons and then into specific sales through our snapshot reports. Then we can move on to our more in-depth, and we call this our Market Plus report series, which, as Anders mentioned, a couple of them, we have like a guarantee analysis, we have our confidence report, again, that's with an expert panel, and we look at various different aspects of the market and the art world that we find interesting, such as single owner collections. And I think we'll do a follow-up to that report this year, because there seems to be a lot of exciting collections coming up for sale this autumn. If we could go to the next type of research. So we also have our art industry research. We have some really great partners who we work with, including Hiscox, Deloitte, Art Dubai, and they kind of commission us to investigate different areas of the market and the art world. And then we write these reports. They're often free, as we've been commissioned by a corporation to write them, and they're available to everyone to, get a broader understanding of particular themes within the art market. So finally, we have different kinds of reports on art as an investment. Now, most recently, we've been looking at fractional ownership, which has been a real hot topic over the last few months. And we published our first fractional ownership monitor in August, where we looked at masterworks. They have SEC filings, which allow all their information to be publicly available, similar to the auction houses. So we're able to get a real understanding of how their model works. And as you can see, we have some other examples of NFT reports that we've written, and of course the Deloitte Art and Finance report. So moving on, the next step in our kind of offering is bespoke services. So I obviously can't show you this because they're bespoke to each client, but we can kind of undertake any sort of research that you are interested in within our area. We can write specific artist reports. If you're particularly interested in Andy Warhol, say, we could write you a report of varying degrees of length and in-depth nature on that. We also do different geographies, industries, and can produce surveys, etc. for you. Then finally, we have our extras. So the first group of extras we have are our courses. So Anders is a lecturer at Sotheby's Institute, amongst other places. So he has a great knowledge of the art world and lecturing. So we have the path to becoming an art market analyst, which is 3 different courses. And then we also have more specific courses on different interesting themes, including art and finance, tech, fractional ownership, and NFTs. Then alongside these courses, we have our podcast, which is hosted by Adam Green. He speaks to different art world players each week and ask them questions relevant to what they do, from auction house specialists through to art advisors, those in museums, artists. He sort of has his finger on the pulse and gets a really great selection of people in for us. We also have our art forecaster, which is you can guess the price of an artwork and where you think it may sell. So you could do this just as a game, just to see what you think it could be. But we also do have people who use it to kind of brush up on their professional skills and see how well they know an artist's market and how well they can predict what things will do. And then the final section is our editorial, which I don't have a slide for, but it's a section on our website where we have sort of more in-depth looks at various different aspects. So as I mentioned at the start, we are a membership company. We have 3 different levels, and with each level you get a different level of access to our reporting. And these are, we can take payments on a monthly or annual basis. More information about this is, of course, on our website, or you can feel free to shoot me or Anders an email, and we'd be happy to help you with that. And I think on that note, after our quick whiz through, are there any questions? I do see a couple. I will just open them up. First off, will we make the slides available? Yes, we will. I will ping you through an email with those, and I'm hoping my recording's gone well, so I'll send through the recording as well. And then one question, Anders, for you is, do you think that the sanctions on Russia and Russian oligarchs will significantly decrease the demand for art in the coming years?
I think there was, well, I think it probably will have some impact. I think, but I think the Russian buying maybe over the recent years is not as maybe been as dominant as maybe other parts of the world. I think, in the sense what we've seen, wealth coming out of other, like Asia, as I mentioned earlier, has been very strong, particularly up till 2021. A little bit less so now, but I think it might have some impact, but I just don't think it's going to be big enough to really change much in the art world. I think the kind of the global nature of the art market right now, I think the wealth is so now widely distributed around the world to different pockets in different parts, that I think maybe had you asked the same question in around maybe 2006, 7, 8, maybe I would probably said yes. I think now it's just one of many, and I don't think it's going to have an enormous, it will have impact on certain sectors where maybe some of the Russian collectors has been active, but in general, we might just see some of the actual artworks. I don't know, again, it depends on sanctions, obviously, in terms of what they are able to do with regards to their assets and whether they're allowed to do anything with them. But I don't think it's going to be, I don't think the actual Russian collector going to have necessarily a massive impact. I think the war will have, the conflict itself, I think it will have a much larger impact on the art market in terms of the uncertainty that it causes. And these are the sort of side effects in terms of now on the economic situation and energy prices and all these things that we're seeing. I think that's much more serious than the fact that Russian collectors are, no longer active in the market.
Great, thank you, Anders. The next question is, looking at your confidence indicators, how many people reply typically, and how long of a lag is there from gathering the replies to the publication of the report approximately?
So that's a good question. So basically this, the confidence indicator started, so we started in 2005. So almost for 4 years after I started, I started this as a project in terms of trying to harvest intelligence from people in the marketplace. And we have kept the sample around between 105 and 120. It's modeled on the CEO confidence survey that you have in the US, which is basically a sample of 100 CEOs in major industries around the US that will be, in this case, they will be surveyed on a monthly basis regarding anything about the business, from the prospect, the outlook, the employability situation, all these kind of things that, in a sense, captures the industry leaders. And we thought, when we started this in 2005, that there would be something similar where we could, instead of just view what the figures out there was, we could obviously observe an auction result and say, well, this is amazing. What we really wanted to try to get to is, how do people think about the kind of signals that we see in the market? So we started it in 2005. We built a sample up to about 100. The lag is very short. We typically do the survey within 2 weeks. It's launched and it will be wrapped up and published within 2 weeks. So there's very little between actually what it happens and when it's published. But obviously, the fact that we have a 6 monthly kind of lag between each survey, that means that obviously there's quite a fair amount that could happen in between. As we saw, the market actually, when we did the last survey in early part of this year, the market was very positive. People looked at the prospect of 2022 really favorably. I think so far that actually has come through. I think the first half really looked, it was one of the strongest, particularly in the auction market, one of the strongest years. Art fairs has been, decent and robust also so far. I think what happened now in July, obviously that's incorporating both the conflict that we have in Ukraine, as well as the economic sort of deterioration that we're currently seeing. And the question is now sort of, what is that going to happen next? And there's typically what we have seen, if you look at the data going back in time, there's a lag between people are going from kind of negative and saying, well, I'm not feeling that positive, until the market actually tend to react to that. We had, if you go back to 2009, the financial crisis, what we saw was that people actually in 2007 already, in the autumn of 2007, a very large share of those experts were turning negative to the future outlook of the market. So that was almost a year prior to the Lehman collapse. But obviously they were reacting to already news in the market. It was not as the financial crisis just started in 2008. There were already evidence. We had the run on the bank here in the UK or Northern Rock. There were a number of financial institutions in the US that was in trouble, and people were seeing this as a potential danger to the art market. It took a long time again for the art market to react to those news. So I think for us, we tend to use this confidence as a kind of as a signal of concern, like of uncertainty, that maybe in 6 months' time maybe we come out of this crisis, or whether we are seeing improvement. All of those things might change people's sentiment towards the future. But so hopefully that gives you some background. As I said, it's a small sample. It's relatively diverse of mostly collectors, but also people who are art advisors. There are appraisers. There are people who are more in the kind of investment related side of things. There are galleries. And there are also media people, being journalists, etc., part of this sample. We're trying to give a sort of reflection also geographically, that they are split across the world in different places, so that we're not talking to people in the UK, but we're really talking to people in the US, Europe, Asia, and here in the UK. So as I said, we're using these as a layer mechanism across to kind of help us also to understand these signals and these results that we see in the market, so that it's become, we're using other people. And that's the whole sort of essence, as I mentioned very early on, is this crowdsourcing techniques that we're using. It's not really about my voice or what and what Lindsay and I think about, it's really to use other people's that are probably much, much closer to the market, and we're taking their views, their consensus, and are presenting this in a way that helps us analyze and look at the market in, whatever it tries to tell us. Is there any more questions, Lindsay?
I have a couple more, yes.
Yeah.
One question was about how many reports we publish. So it's maybe one for me, Anders. We this year have published, I think, over 30 reports this year. And then we typically publish between about 40 and 50 a year. So it's not quite one a week, but we try and aim for it as much as we can, as we physically can push out. And Anders, I have another question for you, which is, do you think there are any African cities that will become art hubs in the future?
Yeah, I think the African was the continent. I think it's interesting. I think we have looked a little bit, obviously, through the latest research that Lindsay just mentioned. We launched William Kentridge today. And obviously that is a very specific market. Look at the South African, and South Africa obviously is a much more mature and marketplace when it comes to art than many other places. But I think we started to look a little bit at this. We have a report that's covering Africa, both more from an auction perspective, but also start to look at some of the initiatives that's happening with regards to building infrastructure, building, everything from institutions, educational aspects, galleries and commercial infrastructure, art fairs, auctions, and so forth. And I'm not quite sure exactly where that hub's going to be. I think the hub at the moment commercially is, I think, South Africa is by far the sort of the biggest at the moment, but that's also because they have a longer history than many of the others. But I think, both if you're looking at Nigeria, looking at Ghana, there are other places I think, is really interesting. And I think it's one of the markets, and we look at our outlook early this year, 2022, there's still, and has been for the last 3 or 4 years, really a very strong positive sentiment and interest in the African market. Obviously, if you look at from a kind of a price point of view, there's still enormous opportunities to acquire art at relatively affordable prices in a market where there's an incredible creativity and amazing artists, and just we're starting to I think the Western audiences are getting more exposed to African art through the successful art fairs such as 154 and others. So I'm not, to be honest, I'm not sure exactly where that hub might be. I think it definitely as a market to watch. As I think it's a it's very early stages, and it's incredibly interesting, I think, to be part of something at this point. And we're seeing collectors and clients that we are involved in expressing a strong interest, and we see it also from our reports. I mean, the Africa report when we publish that on an annual basis, are among the most popular reports that we produce, and obviously that, even if that doesn't give a full picture of the African market, it gives us some sense of the trends and the sales trends, broken down by different artists and different countries in Africa itself.
Great. I think that you've answered all the questions that I have received, unless anyone else has another question. If you could.
And if there,
we have one more, Anders.
Okay.
Do you think Seoul could become a new hub in Asia and overtake Hong Kong?
I think there is a potential for that to happen. I think there's a lot of things happening in Seoul. I think obviously one thing that we in the West have seen is obviously with the with the Frieze Art Fair. And I think these when Art Fair sets up a presence in a new hub, it doesn't happen out of the blue. I think it's clearly that there is an underlying demand, and there's an underlying infrastructure. I mean, Korean collectors has been active for many years. There's a well-developed infrastructure, both in terms of institutions and galleries in South Korea. What was interesting is that we have seen a lot of other types of initiatives actually being approached by people more kind of from the investment side, fractional ownership, more kind of tech companies. And so it seems to be a lot of energy that is taking place in South Korea at the moment, in particular Seoul. Whether it's going to take, I think, well, at least for now, Hong Kong is still the kind of hub into mainland China. And I'm not sure if South Korea will kind of substitute that. I think it's become trickier. I think the COVID and the restrictions, particularly as I said earlier on regarding people had problems either getting out of the country or into the country after all these things created obstacles. But I think there's definitely there is something happening in Asia now that we haven't seen. Actually, there's been talk about Singapore, for example, for the last 20 years. Almost when we started, I remember Singapore was sort of kind of predicted to be the hub. It hasn't really happened, but I think there are shifts taking place, and it might be forced by the kind of changing political situation in Hong Kong. It might be forced by as I said, the whole way that the pandemic has been tackled within Hong Kong and so forth, and the fact that I think Seoul and Singapore is taking a much more proactive role in trying to kind of regain or gain that position that Hong Kong has. I don't think it's going to be sort of straightforward. I think it's going to take a while. There's a lot of infrastructure that's been invested into Hong Kong. There's still an incredibly important way and channel into the mainland market, and I think and if you want to be close to the Chinese collector base, audience, clients, consumer, I think Hong Kong still will be important. So, but I see a potential gradual shift, or that these other destinations somehow, or the other cities, will kind of complement and play potentially a much bigger role than they have done in the past.
Great, and I have one more if you've got time, Anders.
Yeah, I think we got a few minutes, so let's shoot.
It says, who will make a price index that everyone can follow in the industry, such as May Moses was? It seems number one priority in terms of gauging the market pulse, i.e. not sales.
Yeah, it's a great question, actually. And I think there's something that's been, we come across all the time. It's how do we measure the art world and how do we measure the art market. And May and Moses, I think it was the closest that we had to something that was kind of universally accepted in the art world, as at least as an index that we felt was done in a proper way. I think the methodology using kind of repeat sales was something that people understood. It was set up by academics, which meant it was sort of relatively neutral. I don't think it helped much, obviously, the fact that Sotheby's bought May and Moses and then suddenly became a private tool rather than a public one. And we haven't seen actually something coming in its place. There's a lot of indices out there, but I don't think, there's also suspicion around indices, right? They're often being used in conjunction with other services. So they conjunction with trying to sell something. And I think, it really needs to come from almost someone from the outside. It needs to be almost like a kind of an S&P or as, indices or a market or some of these kind of index providers out there that actually doing other kinds of indices might be the ones that actually could come in and create something that was almost kind of external to the market. I think that's the problem, is if it's created by some of the key players in the market, it often is not going to be trusted because people, rightly or wrongly, might believe that these indices might be tainted by some kind of biases that these operators might have. So I think it's definitely needed. I think if we're really going to talk about art in terms of an asset class and being able to benchmark art against any other things, we need to have something that is universally accepted. It's not good that everyone who's trying to sell art as an investment comes up with a different proposition, different type of index that, people will think, well, that looks favorable and to what you're trying to communicate to the audience, but actually, that index is not trusted. So I think we need, and I'm not sure where it's going to come from. This has been a topic that since we started in 2001, we're still talking about it. And as I said, May and Moses was the closest we had. I think, something needs to come in its place. So I think there's definitely opportunities. Do we want to move into that space? I don't know, actually. I've been always a bit hesitant about indices, partly because I think a lot of the research that we're doing feels very sort of, we're trying to make it actionable in the sense that we're trying to provide research that ultimately allows people to make decisions or help them making decisions and hopefully informed decisions. I think sometimes to actually create a truly representative art index that really represents the market is really, really difficult because it's such a fragmented marketplace with so many different segments and sectors. And the more we're trying to sort of create one index, the less probably it tells us about the actual underlying asset itself. But again, that doesn't make it, not a viable thing. I think it is something that is needed, but probably not something that we actually will focus on ourselves. So it's a good question, and I still, if I come across anything that is remotely might look like something interesting, come out, let us know. And obviously, if there are other questions, so I guess we have to kind of wrap up. Please forward those to Lindsay, or maybe Lindsay. You can see if there's any. I don't know if anyone. Is there any questions left in the?
I think that's it on questions on the.
Perfect. Excellent. But so if anyone has any, as I said, it was a kind of a little bit of a run through. What we're going to do when we do this sometimes on the podcast, which is sort of mailbag, which is basically Adam and I answering questions. So we will, obviously that's one way of you asking, what we might think about certain things. Not that we are necessarily, right about what might happen, but I think, hopefully we have access to quite a lot of intelligence and different trends, and hopefully can sort of share that with you. So we will do similar things sort of probably on a quarterly basis, just to check in and see where the market is. And hopefully, you will follow us. And any question you have regarding our services or reports or memberships, reach out to myself or Lindsay, and you have Lindsay's email here. So she will be your ideal contact. And with that, I would just like to thank Lindsay for being with me here, sharing this presentation. And for all of you to spend an hour on a Thursday afternoon, at least in London. And I wish you all the best. And let's see what this autumn's going to bring us. Hopefully it will be something positive. And we will be back reporting on the events coming up in auction in a couple of weeks, where the main marquee sales are taking place. So watch out for that. With that, I would just like to say thank you very much, and see you soon.
Thanks, everyone.
See you.